Well, it is the appointed hour, and we should get started. My name is Craig Allen. I am the president of the U.S.-China Business Council, and it's a great pleasure and an honor to be with you today for a discussion with Dr. Tao Wang, who has just published a new book that is very important for all of us who are interested in the Chinese economy. So good morning to everyone in Asia, and good evening to everyone in the United States. And it is my pleasure to be talking with you today about making sense of China's economy. This is a new book published by Dr. Tao Wang, published by the Routledge Publishing Company. So I will introduce Tao in a second. She will give a brief presentation on the book, and then we'll have a moderated discussion about some of the insights that she has uncovered in her work. But let me first note that this event is held with USCBC members and our guests, and we welcome all of you to participate in the program and ask any questions of Dr. Wang that you would like over the course of the conversation. But please know that this recording will be posted to YouTube so that others will also be able to get exposure to the book and the learnings therein. So what this means for our audience is that should you have a question, please submit it in the Q&A function, and I will read it while assuring you of your anonymity. We want your input. We want you to ask questions. We want to have a dialogue. So please participate in the discussion. Essentially, this is a private discussion that will later be made public. So please allow me to make a brief introduction. I suspect that many of you who listen to the macroeconomic debate about China in Chinese know that Dr. Tao Wang is an extremely well-regarded macroeconomist who often contributes in the Chinese media conferences and academic debates. Just yesterday, I saw her quoted extensively in Caixin on China's most recent export numbers, but you'll see her very often, particularly for those who follow this in the Chinese language. But those of you who have not encountered her before are in for a real treat this evening. So Dr. Tao Wang is Chief China Economist at UBS Investment Bank in Hong Kong, and she formerly worked as an international economist at the International Monetary Fund, the Bank of America, and McGraw-Hill. She has her bachelor's degree from Renmin University and a PhD in economics from NYU. In her newly published book, Tao weaves multiple strands of the Chinese economy into a holistic and organic tapestry that really provides a lot of insights from either a Chinese citizen's perspective or the perspective of the China's role in the international economy. While Tao is clearly a economic specialist, she's written what is a clear, sensible, highly insightful book. In many places, it is beautifully written. It is 100% up to date, and it is chock full of insights and a delight to read. So Tao, perhaps we could start out And let me just ask you to introduce the book. Why did you write the book now? And how long did you work on it? And what were your top objectives?
Thank you so much, Craig. Thank you for inviting me. It's my pleasure to be sharing my studies on China with you and your members. And thank you for that generous introduction. Yes, so the book, Making Sense of China's Economy, is exactly what I'm trying to do. I've been working on China, studying on China for decades now, in working in the financial industry for the past 15 years or so. There has always been many questions from every walks of the world and every perspective. But some questions does not really change. They for example, is China going to have a debt crisis? Does China have a property bubble? Is China going to be in a middle income trap, and so on and so forth? So some of these questions are very similar, but I also, one objective to write the book is I want to bring an objective and balanced way of looking at China's economy, its current state of many contradictions, not a simple narrative, and its evolution after the reform and opening since 1978, how it really evolved into this very complicated structure we're facing today, and why it has really defied many predictions of doom over the last couple of decades, and also the challenges it faces now, and how it might move forward. So I try to bring the history of reform and history of the economy and also policy making, and bring out the fact that China's policy making body is not the government, the party, and so on, is not really a monolithic apparatus. It has many different stakeholders in the economy, in the policy making process. There's a lot of give or take, and so policies often are a compromise of many different interest groups. They may be suboptimal. They try to solve the problem. Sometimes they create distortions in the ways of solving the problem. I think that probably can help clear some understandings or misunderstandings on China. If there's only one takeaway for the readers, I hope it to be, do not extrapolate about China's economy. I think, after looking after China, trying to forecast China's growth for many decades, this is a lesson I learned, and I think a lesson that everyone should keep in mind. Because the economy is complex, the government has been, so far, been largely pragmatic, and policies tend to adapt to address some of the most acute issues of the day, to maintain economic and social stability. So I think extrapolate often, can be quite wrong for us. So, some of the other key points I also wanted to clarify in the book, what was really China's key source of economic success. This narrative has changed over time in the past, many years. In the beginning, I think it's very clear that it was the reform and opening. And then later, I think people seem to forget, and they talk about, it's the demographic dividend, or it's WTO entry. And more recently, there seems to be, both in China and outside China, seems to put a lot of emphasis on sort of the state's involvement, the industrial policy, state control, and so on. I think with the book, I also wanted to show through the history and show to people that, all of these things probably mattered. However, China used to have 100% state control, 100% state ownership. We had a lot of people and very young, but that's not what got China's economy accelerating, growing so rapidly. It's precisely moving away from the state control, inviting and opening to foreign trade and foreign investment, competition and market forces, and so on. It's precisely those reforms that got China going, 40 years ago.
Well, Tao, thank you. A great opening comments. Let's talk a little bit about the 20th Party Congress and the relationship between the private sector and the SOE sector. You do a great analysis on the benefits and the strengths of both. But I wonder if you could share your observations since the 20th Party Congress on the balance between the two, and what you think that we should expect over the next foreseeable future.
Right. That's a very good question, because I think, the role of the state versus the market, and the role of the state-owned sector versus the private sector has been in debate or doubt over the last few years. So after the 20th Party Congress, I think senior leadership and the government sought to dispel the perception that the government looks at the private sector unfavorably, which is a perception that grew in recent years due to things like regulatory tightening, the talk of curbing capital disorderly expansion, and languages like that. So I think one thing to note is the Party Congress report reiterated this phrase of non-wavering support to the private sector, and reiterated that the party intends to stick with the market orientation of reform, since 1978, which is, I think, comforting and welcome for the private sector. Senior officials also visited various, private companies, platform companies that were under tighter regulation before, and they were talking up of developing the digital economy, developing internationally competitive platform companies, and so on. Basically, there are some, support coming from the official rhetoric and so on. So I think there is definitely a recognition that the perception has changed, and the government is trying to address that. I think it's welcomed by the private sector, although I think it probably will take some time for private businesses to restore their confidence. They probably want to see concrete measures from the government. And of course, the economy recovering from the current very weak state with orders and profit declining, that will help too. But I think, going forward, the private sector probably want to see, is the government treating private sector really equally? They want a leveling playing field. The government on its own part has been trying to, lower tax and lower interest rate for the private sector business. Those, of course, are welcome too, but I think probably fundamentally, private sector companies wanted to feel being treated equally, have the same access, and also, ideologically safe, that they do not face this debate again and again in the public arena about, are they still important? Of course they are important. They're an integral part. So I think the government need to reiterate that unwavering support all the time, and also, come up with concrete measures. So we are expecting, I think, probably some of these measures coming. For example, I think the government has said that the regulatory framework has already been set up for platform companies and so on, so that we are going to operate in a normalized environment. So that's very helpful. And I think, next stage, what we're looking for is, as I mentioned, a more leveling playing field in terms of access for private business going forward.
So that would be a level playing field with state-owned enterprises. Are you optimistic about state-owned enterprise reform? It's something that you discuss in your book, and it strikes me very important if China is to get out of the middle income trap. What are you seeing about state-owned companies reform that should make us optimistic or pessimistic?
Right. So on the SOE reform, unfortunately, I think progress has been very slow in the last decade or so. Already in the third plenum of the 18th Party Congress, that really overarching reform document published in 2013, have identified, the SOE reform as a key part, and that they want to make market the dominant source of resource allocation, playing a dominant role in resource allocation, and that SOEs are going to shift towards, instead of state asset management, state capital management, which means that they could exit some industries. And so those kind of process has been relatively slow, I have to say. And I'm not sure how optimistic one will be about the SOE reform, because they face strong resistance in some quarters, including the SOE sector. And also, I think it's clear that the government has no plan to privatize the SOEs or make them much smaller. So I think there's an embracement of the state-owned sector, which is fine, I think. But what is needed is, as I mentioned, a leveling playing field for the private sector, so that the private sector can compete on an equal basis. And so if they can compete on an equal basis, I think both the private and the state-owned enterprises can be stronger in that way. And also, I think that for the important thing to watch is not necessarily the ownership change, but are state-owned enterprises following the same market discipline as private sectors are? So that's one sense of equal playing field. The other is that in resource allocation, can the market forces play a bigger role in resource allocation, meaning capital, land, access to major projects and so on and so forth. Can those things be equal? So I think we are looking for maybe gradual reforms in those areas. And also, I think there is hope that there will be some exit from SOEs, just because, for example, local governments are facing quite tight fiscal challenges.
Right.
And the central government does not want to bail them out. And so one way for them to get out of or to reduce that risk is to divest from some of its SOE holdings, from some of its assets. Right. And also gradually reduce their involvement in direct investment. So I think as that happens, I think the environment for the overall economy for private sector to operate should improve.
Thank you, Doctor. How about, we've discussed the private sector, we've discussed the SOE sector. How about the multinational sector? Do you see that growing over the next 5 years or possibly shrinking? Would you look at that? Is the environment for a multinational company really contingent on how the government is treating private Chinese companies?
The multinational companies actually in China's reform history has in the past enjoyed the privilege, especially compared to Chinese domestic private companies, because the government really was trying to attract foreign investment and gave a lot of preferential treatment, most notably tax, much lower tax and so on. This, of course, changed in 2008 when the government unified the tax code for foreign companies and domestic companies. But I think at the national level, multinational companies still enjoy that kind of more favorable outlook from governments and so on than private companies. Going forward, the question is, will multinational companies continue to expand in China, be able to thrive? I think there are good hopes for that. But I think there is also a lot of headwind. One of the big headwind is actually not from China, but from outside of China. I think in the current environment of decoupling from China, national security concerns, things have been politicized. Especially on the high tech area. So I can imagine the lives of multinational companies who are involved in China must be quite difficult. They have to really please, their customers, but also they don't want to be on the wrong side of their own government as well. So that could be a challenge. We have done at UBS, UBS have done evidence lab surveys looking at export-oriented companies, and in recent years, especially after trade war with the US, there has been increased intention of moving away from China. But and so I think that could happen, especially on the high tech side with that kind of political pressure. But on the other hand, I think China is a very large economy and large market, and it's the fastest expanding large market in the world. There's a lot of investment opportunities that may not be very sensitive to national security and so on. So I think in those areas, I can imagine that foreign companies will continue to expand in China to produce things, goods and services for China's demand, not for exports. We have seen that as well. So in terms of FDI numbers and trade numbers, we can see that there has not really shown, at the macro level, signs of decoupling. But of course, by sectors, things may be quite different. For export-oriented sectors, they may want to diversify the risk. For those producing for China's domestic market, they may be want to expand in China. So I think that it's hard to say at this moment what's the net impact, because China, of course, right now is also trying to again engage and attract foreign investment in a more earnest way than perhaps in the last couple of years. And so with that, I think there's hope that MNCs can still expand.
Tao, that's great. It's a complex situation with different industries facing different circumstances. One concern of many multinationals is dual circulation. And you write about this in your book very, very beautifully, I thought. Could you summarize, what do you think are the implications for multinationals? And is really dual circulation a way to impact and perhaps expand China's current account balance? Is it a form of import substitution, or do you look at it as something else?
Right. Yeah. So dual circulation, I think I have to say, is not a very self-explanatory concept.
That's so true.
It involves internal circulation, external circulation, according to the government, and the main focus is internal circulation. For me, though, this is just a new term emphasizing some of the same policy focus as before, but labeled under different things like expanding domestic demand, supply side reform, and so on. I don't think it means that China is going to turn inward and neglect, external integration. But it's a recognition that the external environment has changed. China has grown too big to rely too much on exports and on external market. In addition, China faces rising protectionism outside and decoupling pressures. So the future source of growth has to mainly come from within, and so the internal circulation. But internally, domestic demand has been relatively weak, especially domestic consumption. And some parts of the domestic-oriented economy are not so efficient. The export-oriented companies are very competitive, but the domestic-oriented ones often are not so efficient. So there's a need for a lot of structural reforms to change that. For example, push through reforms such as hukou reform, support the private sector to generate employment. This will all help expand domestic demand. And then change the supply structure to meet the domestic demand as well. And China's imports, of course, also face restrictions, especially on the technology side. And so China wants to increase the supply chain resilience, self-reliance. They will spend more on R&D. They will want to upgrade technology. I think the strategy is probably import as much as possible on the tech side, but prepare for any disruptions. I think China feels it has to build alternative technology, alternative ecosystem, just in case, right? There's the national security concerns. But so in this process, I think China still welcomes foreign investment and wants to expand foreign trade, including importing all the necessary components and high-tech stuff. And it has been very proactive with regional trade agreement, wants to, the RCEP, and wants to join CPTPP, things like that. So, but I think MNCs, the multinationals, still have a big role to play in the so-called dual circulation. Of course, there is a change in domestic competitive landscape. Chinese companies are becoming more competitive, are becoming rivals for some of the companies that had been leading so far ahead. In some industries, the industrial landscape, for example, in automobiles, the industrial landscape is suddenly changing. The incumbents, advantage may be disappearing. So they will face very severe competition from China. So it's not, I don't think the dual circulation is set out for really import substitution. Apart from certain sectors like high-tech sector, I think China wants to be able to have its own system, not by choice, because it's going to be costly, it's not going to be very efficient and so on, but because of the external environment, it feels it has to do. So it's not set out to do that, but in some sectors we probably will face, as domestic producers become competitive, I think foreign companies will face the heat of some of the import substitution. Net, though, I don't think China's current account is going to necessarily move in one direction or not, because export will become weaker. Imports may be weaker, but exports may also become weaker as well. So I don't see a large deficit or a large surplus either way. So it's going to be probably just fluctuate.
Interesting. Your background with the IMF gives you such a wonderful perspective, unique, I think, among private sector economists. And one thing I learned in your book, I should have known, but I didn't, was that China is almost at the level, as described by the World Bank, as a high-income country. You won't hear that from the Chinese government, but we heard it from Dr. Tao Wang. So I was very pleased to learn that. When you look at this, though, the challenges going forward are very severe. So could you talk about the challenges going forward? Do you think China can escape the middle income trap? What steps are necessary to do so? And how likely is the government or other actors to take those steps? Big questions, I know, but appreciate your perspective, having worked for the premier development international institution.
Thank you. So for over 10 years, there was this debate, when China entered the middle income and when its per capita GDP was about $4,000 more than 10 years ago, there was a debate, will China be able to escape the middle income trap, as some other developing countries, mainly in Latin America, seem to have. For China, of course, the question is really what is a middle income trap, and so there are multiple definitions. On the simple definition, as defined by the World Bank, what is considered high income country, China is almost there, almost escaped it, right? So it's about $13,000 per capita, and so on and so forth. But if we're talking about really middle income, let's say 25,000, 30,000 or so per capita, GDP, then China, of course, still have some far way to go. And the real question, I think, I understand from your questions, the real question is, can China sustain a moderately high growth going forward? So I think there is a lot of challenges indeed. And so both, I think the external environment and China's own economic fundamentals have changed a lot, in the last 10 years and continue to change going forward. China is now a much richer country, almost high income. And so that means a lot of the low-hanging fruit in terms of investment and productivity growth, as well as reforms, have already been picked. And it now faces, a much bigger hurdle. It faces demographic challenge with working age population declining, and externally it faces a lot of protectionism and decoupling pressures, as we mentioned, and the economy becomes, domestic demand or more domestic demand led, and so on. So with these challenges, and not to mention, the high debt level, a lot of wasted capital, wasted investment in the past, and the not so efficient SOE sector we talked about. So to move forward, what does China need to do to sustain, a moderately high growth? I think China needs to push through some really tough domestic reforms, and need to encourage and be able to innovate and support the private sector and remain open. These are the four big categories I would say are needed. So the reforms, for example, like hukou reform, extending retirement age, they're necessary to ensure labor force can continue to grow, and then also that there's more sort of equality, reduce the inequality, and the SOE reforms and letting the market play a more important role in resource allocation, I think is important to improve economic efficiency so we don't waste so much investment and capital. But progress in this area has been slow, as we mentioned. I don't see any major new initiative at the moment. Hopefully they will come. But this is an area that we already discussed is very important, but has been not seeing any major progress. The health of the private sector is critical in sustaining growth. We also talked about that. I think the government has now pledged unwavering support, but what are the concrete measures? How do they increase private sector confidence? I mean, that is related to SOE reform as well. And then on the innovation part, I think China faces a big constraint of restricted access to advanced foreign technology. Even though I think the government is pushing for innovation, will spend a lot more on it. So with the restrictions, I think unfortunately China is going to spend more and get less return. So that means a weaker growth going forward. But that said, I think on the positive side, China is still, $12,000 per capita. US is about 60,000 or so, or more. So China's productivity level is still relatively low. So that means there's still a lot to catch up by applying mature technologies, by moving up the value chain, and push on the green technology front and so on. So on that space, I think I am relatively optimistic that China can maintain growth, of probably 4+% in this decade.
Yeah, I believe that you say between 3 and 5%, and you're hoping for 5, but expecting somewhere around 4, and fear 3%. We do have a couple of questions from the audience. The Chinese government has recently shown heightened sensitivity to the flow of information overall, with a broadening definition of national security. To what extent will these growing controls limit economic growth? And how aware do you believe is the government on the trade-off between national security and growth?
Right. So that's a very difficult trade-off to make. I think every country seems to be grappling with that. I've noticed
Sure.
every country seems to have heightened national security concerns. And in many countries is about China. And for China, of course, then it's concerned about national security itself, since the external environment seemed to have become more hostile from some of the major trading partners. So on the information front, I think there's definitely concerns of sensitive information being outside of the country. There's also in general, of course, a rectification of the previous lack of privacy, protection and data, privacy and so on and so forth as well. I think the authorities are still figuring out what's the boundary and what's national security, what's really about data privacy, what's about protecting consumers, what about governance structure. Should a corporate be allowed to have so much information to influence a lot of things, how the government is, how the society is governed, how people's information are used. And so on the latter part, that is the challenge I think every country is facing at the moment. And I think the European Union probably does a more decent job in trying to make that balance. I think China is still exploring. So, what is the trade-off? I think economic development is definitely still very important, and it's reiterated as a top priority. But national security concerns has increased. There's no doubt about that. And so I think for investors, for companies, they need to be aware, in the areas that they're operating, are there national security concerns or business concerns?
So, Tao, in your book, you do, I think, the best job I've seen talking about consumption and debt. And I'd like to quote your book because I think it's just a beautifully written sentence. You write that while consumption has grown rapidly, it has been weak compared to the country's economic and investment growth. A very simple sentence, but I think profoundly important. So how weak is consumption, and what steps should the government take? Do you expect those policy steps in the near term? And can consumption be the growth engine that the Chinese economy really, and not only the Chinese economy, but the world economy really needs? I'm grateful for your thoughts on household consumption.
Thank you. Yeah, so it's a very complex question. So consumption is weak in a sense it has grown slower than GDP and then investment in most of the time since the mid-90s. So in other words, China's GDP was growing at 10+%. Consumption was growing at 9 to 10% in real terms. So 9 to 10% is certainly not weak. So you see, rapid growth, but it's weak relative to others.
Right.
So as a result, consumption as a share of GDP is very low in China. It's just over 50% total consumption. Household consumption is barely 40%. It's under 40% of GDP. In comparison, the US household consumption is more than 70% of GDP. Of course, US is a bit of an outlier, but most other countries would be around 60% or so. So consumption is weak in that sense. Why it has been so weak? I mean, that helps explain, what the government needs to do. A big part is China's growth model have been very investment driven. That means it's capital intensive. So that means labor income, which is the main source of household income, as a share has dropped during most of those time between mid-90s until 2010 or so. And so that's one big problem. The other, of course, is household savings. With whatever little income they have had, their saving is also high because of lacking of social protection, such as pension and healthcare coverage has been relatively lacking. public education was getting more and more expensive. There's income inequality and so on and so forth. So, to really change this, change the weakness in domestic consumption, one big thing is change the growth model, rebalancing the economy. We've been talking about it for almost 20 years, away from heavy industry, more to services, more support of employment growth, build better pension and healthcare insurance coverage, reduce inequality, and so on. So to the credit of the government, they have been saying that for 15 plus years, and they have been taken some steps in the past decade. For example, one way to help change the growth model is reducing the energy subsidies and strengthening environmental rules, because those sectors tend to be very capital intensive sectors. So if you do that, and then those sectors will be curtailed. And also ask state-owned enterprises to pay dividends to help pay for the pension, because otherwise, if they don't pay dividends, they just plow that back to investment more, and that's not very, household friendly. And then also have better labor protection, new labor law, and better social safety net. So all of these measures have been gradually taken, and so consumption as a share then did start to reverse and go up since 2011, between 2011 and 2019, gradually. Of course, then pandemic hit, and consumption get hit very hard, and there is a bit of a backtracking at the moment. So it's a long process. Some of the reforms that are needed are reforms necessary to sustain growth, to change the economic structure. In other words, very difficult to push through. So it is very gradual. I think in the next decade, consumption as a share of GDP will rise, undoubtedly. But can this be a growth engine? Can consumption be a growth engine for China? Unfortunately, no, not really. Because, by definition, when we produce something, if it's consumed, you cannot use it next period. And if you invest, then it can give you a return, right? So investment drives growth, not consumption. However, consumption is very important. The weight of consumption is very important, because you invest too much, you produce too much, and not consume enough, those investments will be excess capacity. They will be wasted capital, and they will not be sustainable. So consumption is important to sustain growth, and they must grow to also keep the population happy, and to keep production, their value realized. But unfortunately, it will not generate higher growth going forward.
It's so interesting. We have a good number of questions from our audience. One about should the government be directly or perhaps indirectly supporting future policies to expand consumer retail purchasing, for example, in automotive or cell phone. And I could imply from your previous arguments that you would favor strengthening the social safety net. But do you think that there's room for the government directly to spur retail growth?
I think at the moment, because the economy has been really weak, and also because many households were hit quite hard by pandemic and the lockdowns in the last 3 years, there's definitely space for the government to stimulate consumption by providing some income subsidies or consumption subsidies to the population to kind of jumpstart the process. I would favor, as an economist, I would favor providing income or consumption subsidies to a low middle income population, because they have cash constraint, they have income constraint. They were hit quite hard. Not necessarily, stimulating automobile or cell phone purchase, because I think for people who can afford those, they are not so cash constrained or income constrained. But that's typically what the Chinese government favors, because they like to see what the result of the stimulus is. And it's also probably easier for them to manage to give discount or stimulus for certain products rather than distributing money to low-income population, because they fear that the distribution could take a lot of administrative effort. It could be unfair. It could lead to a lot of quarrels. And so therefore, they have been very uninclined to do that, despite all the calls from the people like myself, like economists and so on. But is there a need? I think so. I think the government should, but I'm not expecting them to do much on this front.
Yeah, I think that you write beautifully about this. You note that only 8.9% of GDP was spent on people's well-being in 2021, including healthcare, education, culture, recreation, social protection, and social housing. And that pales in comparison to 27.5% for OECD countries and 33% for the EU. So 9% for China on social welfare compared to 33% for the EU. That is a big gap to cover. And so my supposition is that you would like to see the Chinese government expand that spending.
Yes, I mean, of course, the share, China's share would go up to about 17% if we include the social security spending. And so that's probably more comparable to the 27.5% for OECD, yeah. But still, it pales. And so, for a socialist country, China, I think it surprisingly spent very little on social welfare. I think that comes from the legacy that China thinks that it's a poor country, developing country, cannot afford to be a welfare state. But as China, developed, there are clearly issues of, inequality, especially for the rural residents, for the low-income people. And so one way, I think, for the government is to indeed increase spending on public services, on social protection. That's an area I think the government is planning to do. Of course, with the fiscal challenge, I think it's going to be a slow process, but that's definitely a plan that they are trying to execute.
But this is the other challenge is debt, another area that you write about beautifully. Just another fact that I learned from your book was that China and the US have approximately the same debt load at a little bit less than 300% each. But you're quite I won't say relaxed, but you're quite confident that China will be able to manage this and that it will not be a constraint on growth in the future. Could you explore that with us, please?
Sure. So what I was trying to explain is that despite the warnings of a debt crisis, for the last more than a decade, China has been able to avoiding a typical debt crisis, and I explain why. But there is definitely cost with a high debt level. So China's debt level, around 300% of GDP right now, certainly very high compared to any country at a similar level of development. But there are certain features, right, why China is able to sustain such high levels of debt and not being disciplined by the market with a debt crisis. And so one most important thing, of course, is China has very high savings. When we talked about low consumption, right, it's the other side of the coin. That means high saving. And high saving that's mainly kept domestically, mainly kept as bank deposit at banks, that enables that, the banks and the financial system to channel that, to lend that away to corporate, household, government as debt. And there are other features. The banking system is predominantly state-owned, and that means that on one side of the equation, people tend to have confidence that their deposit will be honored, and the government has typically honored the deposit. So you don't see bank runs. That risk is very low, and so banks have a lot of liquidity. Nobody is pulling the liquidity plug, if you will. And then banks being state-owned, they are not having much discretion of pulling the liquidity plug on companies that borrow either, whether it's private or public, especially public, but even large private companies, because the government will tell them, no, you continue to lend, you continue to extend credit, don't withdraw credit. And so China's credit cycle tend to be very pro-cyclical or counter-cyclical, in the sense that when the economy slows, credit growth increases. That's very atypical in a market economy, because banks usually want to cut their lending when the economy is slowing. So I think because of these features of the government involvement, state ownership, high savings, of course, a relatively closed capital account means people keep their saving in China. They cannot easily take that outside of China. Are the main factors why China is able to sustain such debt and continue to grow and continue to borrow. But there are costs. The cost is that when you don't clear up these high levels of debt and you continue to carry it, that means that companies that are not efficient, are supposed to get out of business, are still staying, and money is not going to the areas that could be more productive and higher growing. And it constrains also macro policy, because you do have such high levels of debt. It constrains the ability of China to open the capital account and make the RMB really an international currency.
Yeah, it's fascinating. The dark side, I guess, of excessive debt and excessive support for companies is overcapacity in a number of industries and price destruction in industries. And I'm not sure that the real estate cycle would fall exactly into that paradigm. It's not steel or solar panels or aluminum, but the real estate industry is a huge concern for many economists. You seem to be, you have seen the cycle many times, the real estate cycle many times. And you note that, and I'll quote you here, the government has abandoned or reversed policy tightening midway, amplifying moral hazard in the sector by underpinning the belief that the government will always save it. So tell us, give us your current assessment of real estate. You write about the affordability ratio, rental yields, vacancy rates, and construction trends. Has the government managed this well? Do you see light at the end of the tunnel, or is this going to be a real drag on the Chinese economy for the foreseeable future?
Right. So the government has a love-hate relationship with the property sector, I think, because property sector has been a main source, or the most important engine of growth for previous 2 decades or so. And local government, of course, rely on land sales a lot for their funding for infrastructure and so on and so forth. So they have incentives to often boost the property prices and boost the land prices, even when the central government is worried about the leverage or price being too high, affordability for the population, and so on. Local governments often have different interests, and that's a reason why also often some of these measures are changed middle way. There have been quite many property cycles. In the past few years, it seems that the central government has been more determined to really sort of bring down or deflate the property bubble and try to deleverage the property sector. We have seen policy tightening from 2020, 2021 or so. And of course, this policy tightening happened to coincide with much longer than expected COVID and COVID lockdown. And also, I think the fundamentals of property demand in China has changed. The population is starting to shrink, urbanization is slowing, the economy is slowing, and ownership is already very high. So as a result, Yeah.
Yeah.
As a result, we have seen the deepest property downturn in history last year. So in terms of sales and starts have really declined very sharply. And so I think at this stage, I mean, from late last year already, of course, the government then reversed the policy on property. This time, I think reasonably so, because I think for them, one key point of trying to tighten policies earlier in the property sector was to reduce leverage and reduce property bubble risk and so on. But if the risk turned out, becomes that the property downturn could bring the whole economy down and threatening the financial system, then it's a different story. So I think the goal in recent few quarters have been trying to stabilize the property sector, giving more credit support to the developers and ease policy for the buyers and so on. So we have now seen signs of rebound and recovery in the first few months of this year. So that's good. And that's, of course, coming from a really deep over adjustment of last year. So going forward, what's it going to be? Well, I think that we will not go back in terms of property sales and construction. We will not go back to the peak of 2020, 21. That is the peak. And because the fundamentals have changed and of demographics and growth and income and so on and so forth. And so property will no longer be the most important driver of growth going forward. So that's a long term. In the short term, right now, I think this year, even next year, we actually could see improvement in the property sector because they were over adjusted, because in the second half of last year, property starts with less than half of 2 years ago level. So they corrected too much and there's a rebound. So there's improvement. But I think over the long term, I said, it's still going to be relatively weak. In the medium term, in the next few years, some of the issues left from this correction in the property sector are yet to be resolved. For example, there's 2020, 21, that's the peak, right? There's a lot of property construction. We don't need that much property construction. So there is excess in some sense, and those excess has to be absorbed. There will be some, waste. That means some capital will be wasted. And the industry supporting those sector will no longer, need to grow as much because the property sector will not grow so much. And the bad debt, as a result of that, have to be absorbed and dealt with in the coming years, including local government will face some fiscal constraints as well if they no longer can sell so much land. So to answer your question, I think there is going to still be some headwinds in the medium term. In the longer term, I see stability in the property sector. So it will not be a major driving force, but it will not be such a big drag as last year either.
Well, Dr. Wang, we are reaching the end of our hour, and we have a lot of questions. So I am going to apologize to our audience for not being able to get to all of them. Your analysis is subtle, rich, always honest, always objective, nuanced, and complex. And you give always a balanced view on the many problems, the many opportunities that China has. And this evening, we have only scratched the surface of your book. The book, Making Sense of China's Economy, is a book that I wholeheartedly recommend to all. It will give you insights that are overlooked otherwise in the popular press, and it will give you data and analysis that will put you in very good stead over the longer term. And Tao, I can't wait for your next book. It is I don't know how many years you spent on this, but it was very well worth it. You have contributed to the debate on China's macroeconomy in a profound manner, and I thank you very much. I thank our audience for joining
Thank
us
you.
Today. I thank everyone who views this, and I encourage you to find Dr. Tao Wang's book and enjoy it. So with that, why don't we adjourn? I wish everyone in Asia a great day and everyone in the United States a good evening. Thank you, Dr. Wang. And
thank you so much, Craig. Thank you.
Thank you.
Bye-bye. Bye-bye.